Welcome, everyone, and thank you for joining BOS's virtual investor event on strategy, execution, and financial discipline. Today's conversation is designed to give you a concise and candid look at how BOS is executing in 2026, converting their backlog into revenue, strengthening its supply chain platform, and driving profitability across aerospace, defense, and industrial and retail markets. We'll touch on the composition and quality of BOS's backlog, recent order activity in key geographies, and how operational discipline in the supply chain division supports both growth and the margins. So, before all of that, we're going to also look ahead to what investors should think about in the coming quarters. With that, I'm going to turn it over to our speakers to introduce themselves, starting with Eyal, and then we'll go to the rest of you. So, Eyal, will you kick us off, please?
Thank you, Tony. Eyal Cohen. I joined the company 20 years ago and acting as the company CEO in the recent 5 years.
Hello, hi. My name is Avidan Zelikovsky. I'm currently the president of the group. I'm also the CEO of the supply chain, which is about 20 years. Before that, the supply chain unit bought the company BOS Odem, which now I'm in the industry for the last 30 years.
Hi, I am Moshe Zeltzer. I'm the CFO of the group, and I joined the company 5 years ago.
Perfect. Eyal, will you give us a brief introduction here before we get started and kick off the presentation?
Yeah, sure. So thank you thank you for joining BOS First Investor Summit. And before we start the presentation, I would like to give a brief on BOS. BOS integrates supply chain of technologies for defense, manufacturers, and retailers. And BOS has delivered 21 consecutive profitable quarters with the $51 million in annual revenue, $3.6 million in net income, and $4.6 million in EBITDA. A solid balance sheet with $30 million in equity, $10 million in cash, and only $1 million in loans. So in a moment, we will play a 10-minute video presentation that we have carefully prepared for this summit. It covers who we are, what we do, our financial performance, and where we see BOS heading. Once the video concludes, we will be right here to answer any questions and have open discussions. So let's begin.
At BOS, we're built around one idea, that supply chains can be smarter, faster, and more efficient, and that the right technology makes that possible. We pursue that idea through three specialized divisions, each one tackling a different layer of the supply chain challenge. Our robotics division replaces manual labor with automated solutions, transforming how inventory is handled. Our RFID division brings precision to tracking and end-of-line automation, from sorting to packing, across the entire supply chain. And our supply chain division works even closer to our clients, integrating our franchised electromechanical components directly into their products. Together, these three divisions give BOS a broad and complementary platform, one that allows us to serve clients across multiple touchpoints in their operations. BOS is led by an experienced executive team of 8 and a board of 4, including a former head of procurement for the Israeli Ministry of Defense. Given our technology focus, we have 2 dedicated CTOs, one for robotics, one for RFID. In total, we're a team of 80 professionals, with 30% being engineers and technicians. Now let's look at each division in more detail. Our supply chain division integrates franchised electromechanical components directly into the products of leading defense and high-tech companies. Our engineers work hand in hand with our clients' R&D teams, ensuring seamless integration that generates long-term OEM revenue as those products move into production. The growth driver here is simple. The more components we embed, the more we grow. That's why over the past 2 years, we've doubled our engineering team and tripled the number of manufacturers we represent. We're proud to serve global defense leaders, Israel Aerospace Industries, Elbit Systems, and Rafael, along with their hundreds of subcontractors across the USA, India, and Europe. This network is our launchpad for global expansion, without the need for costly overseas offices. Our RFID division delivers end-to-end supply chain automation for logistics centers, covering inventory tracking, automated sorting, and automatic packing. We create real-time inventory visibility by connecting warehouse operations directly to our clients' ERP, WMS, and MES systems. Our integrated platform combines ruggedized industrial hardware from Tier 1 manufacturers like Zebra and Honeywell with our own proprietary middleware software. Beyond tracking, we deploy complete turnkey automation, automatic sorters, carton packing machines, robotic palletizing, and pallet wrapping, enabling fully integrated order fulfillment. Our business model is built for predictability and scale, recurring revenue from annual service contracts, ongoing consumable sales, and expansion revenue as clients grow to new facilities. We serve top-tier enterprises across Israel, including Supersal, IKEA, and Teva. Our robotics division designs and deploys custom automation solutions, replacing labor-intensive processes with precision robotics and automated machinery. Our engineers evaluate client production lines, identify automation opportunities, and deliver a complete proposal, from concept design and cost breakdown to ROI projections. Each robotic cell we build is fully integrated. Robotic arms, custom grippers, proprietary peripheral machines, and end-to-end electrical and software systems. Over the past 2 years, we've strategically focused on the defense industry, a sector that still relies heavily on manual labor, yet faces growing pressure for speed and quality. That's a powerful tailwind for automation. Our flagship client is Elbit Systems, one of Israel's largest defense manufacturers. We've successfully developed and installed robotic production lines at Elbit Systems sites worldwide. Though due to confidentiality, we're unable to share footage of those systems. With this offering in mind, let's turn to the financials and where we see growth. When we talk about growth at BOS, we think about it in 2 ways: organic growth, building on what we have, and strategic acquisitions that expand our reach. Over the past 4 years, the story has been primarily organic, and the numbers speak for themselves. Revenue grew from $33.6 million in 2021 to $51 million in 2025. That is meaningful, sustained growth, built on real demand from real clients, and we believe that demand is only accelerating. 3 tailwinds in particular give us confidence. The first is the global increase in defense budgets. This is not a short-term cycle. It is a structural, long-term shift in how governments around the world are prioritizing security. BOS is well-positioned to benefit from this trend for years to come. The second is closer to home. The replenishment and expansion of the Israeli Defense Forces inventory, driven by the conflict that began in October 2023, has created significant and ongoing demand that directly supports our business. The third is newer and very promising. India is rapidly emerging as a major subcontracting hub for global defense programs, and the numbers are already telling that story. In the first quarter of 2026 alone, we received $3.3 million in orders from Indian customers, compared to just $172,000 in the same quarter last year. To capture this momentum and build on it, we appointed an Indian representative company in March 2026 to establish a dedicated presence in that market. We are only at the beginning of what we believe is a significant long-term opportunity. Alongside organic growth, we are actively building our acquisition pipeline, and we have the financial strength to act on it. Our balance sheet is solid. Shareholders' equity stands at $29 million, and we hold $9.5 million in cash net of loans. That gives us real flexibility. We are targeting companies valued at up to $20 million, with 2 non-negotiable criteria. First, financial strength, a proven track record of profitability and consistent growth. Second, strategic fit, companies that deepen and expand what we can offer to our existing clients. On the financing side, approximately half of each acquisition will be funded through long-term bank loans, with the remainder coming from our own resources. I want to be clear on one point. No shareholder dilution is expected. Let me now turn to where we stand heading into the rest of 2026. And the picture is an encouraging one. When we combine our backlog of $31 million as of March 31st, 2026 with Q1 revenues, we are already at $42.4 million, 83% of our full year 2025 revenues. As a result, we expect to exceed year 2025 revenues that amounted to $51 million. The depreciation of the US dollar against the new Israeli shekel is creating pressure on our profitability, and as a result, we are maintaining our net income target of $3.6 million for the full year. BOS is a company with a growing backlog, accelerating revenues, a clean balance sheet, and exposure to some of the strongest structural trends in the global economy: defense spending, automation, and supply chain modernization. And yet BOS currently trades at book value. The Russell 2000, the index of small cap companies we are measured against, trades at approximately 2.4 times book value. Our price to earnings ratio stands at roughly 9 times, compared to 20 times for the index. We believe this gap exists primarily because not enough investors know our story yet. That is what we are working to change, and calls like this one are part of that effort.
All right, we're back. Let's go ahead and jump into some questions that I have and then some questions that have come in through the chat. So let's start here. In 1 or 2 sentences, how would you describe what BOS does today for aerospace, defense, industrial, and then retail customers?
So in one sentence, BOS leverages cutting-edge technologies to optimize supply chain operation through its 3 business division: the supply chain division, the robotic division, and the RFID division.
And then can you give us a sense of how these 3 divisions complement each other?
Yeah, sure. So BOS integrates technology that improve the efficiency of inventory production and logistics. The initial point is when our supply chain division embeds our franchise components in the development process of our client's product. It continues when our robotic divisions offer robotic cell for manufacturing the client's product. Thereafter, our RFID division marked and tracked the product through the production and logistic phases using RFID, and at the end of the line, it provides automatic packing and sorting machines.
Wonderful. Thank you. And then, Avidan, this one might be for you, but how would you describe the supply chain division in 1 sentence, and then the main problem that you solve for customers?
Well, generally, our customers come from the technology sector, mainly defense and aerospace, which we are in the last 25 years focus on. But not only, we also supply to the high level medical, industrial, and other tech. What we do supply is components of various technologies, which include sensors, displays, electromechanical, GPS navigation components, and other. Our base is with engineers, which goes to the R&D engineering team in the tech industry and help them design the components, in which we work closely with partners and distribution centers, which includes huge companies such as Amphenol Aerospace, all are traded in the NASDAQ, Collins, Sensata, Fisher, and we distribute their product and help design, sell their components. It varies from US companies to European companies to Asian companies. So we have a big variation, which we go to customers and help them design their product.
Wonderful. Thank you. And then taking a step back here, where is BOS physically located?
Hi, we are located in 1 site in Israel, and we use 3,000 square meters to operate our business. In addition, we have 2 sales offices, one in India and one in the USA, to serve the global operation of our supply chain division.
Great, thank you. So what portion of this business is defense related?
Yeah, that's a great question. Approximately 65% of our business serve the defense segment in general. So there is a varied exposure among our 3 divisions. Most of our supply chain and robotic divisions revenues are associated with the defense segment. while RFID division engages mainly with retailers. So we are in the process of transitioning a significant portion of the RFID division to the defense segment. And for that purpose, we have recently engaged a specialized consulting firm led by IDF veterans, Israeli Defense Forces veterans, to expand the RFID division into the Israeli defense sector.
Got it. Got it. Thank you. And I know some of these questions, some investors, current investors might already know the answers, but want to make sure that we answer all of these questions for any potential investors who might be watching or anyone new to BOS's story. So let's go this direction here. What is kind of the revenue profile and what portion of it is highly predictable?
I will take it. So more than 80% of our revenues are predictable. A major portion of our products is defined as a consumable for our clients versus CapEx, capital expenditure. For example, the electronic component that our supply chain division sells to our defense clients are embedded into munitions, which are consumables. Hence, the orders are highly repeated and highly predictable. In the RFID division, the annual service contracts for equipment and software and the printed materials like ribbons for industrial printers and RFID and barcode tags are highly repeated and highly predictable. On the other hand, the robotic sales of our robotic divisions are capital expenditure for our clients. Thus, we have a very low visibility into the time frame of new orders from these divisions, from the robotic division.
Wonderful. Thank you. And then Avidan, this one may be for you here. So I know that you've doubled your engineering team and then tripled the number of manufacturers that you represent over the past 2 years. What would you say drove that decision? And then what does that mean for future revenue?
Well, the supply chain has a unique, I would say, solution to the customers, which makes our company unique even a little bit in the industry. First, I would like to highlight both Odem and the supply chain. We have a very, very strong business development and sense for where the technology will go. For example, in the Corona, the medical innovation in Israel to solve medical issues that were rising in the Corona, we immediately drove our engineering sales team to medical companies which develop a medical system for that, and we have been growing with that field. In the last years, if you look at what happens worldwide, the air defense became the most important technology in the world, and Israel is top number one because they have 3 variations of technology of air defense. The aero missile, which intercepts ballistics, you have the mid one, which is the David Sling, and you have the short one, which is the Iron Dome, all of which makes above 90% interception. Well, there's a huge demand due to the Russian-Ukraine war and also other tension worldwide and of course the Middle East. So we already inside all these technologies with our components. This means a lot of need for sales engineering for my team, and we have doubled it because there's a big need for a lot of innovations. So you have a formula here, which in one hand we are conservative because we don't use a huge amount of people in R&D because we don't develop. But in the other hand, if any success of any technology in the market, we design the components of our partners worldwide, and then we get the full business of their export and local sale. And then we sell profit, but we have less exposure to cost affiliated with R&D development. So this is a unique version, and we want to be unique in one hand in business development, and the second with high-level sales engineering.
Great, thank you. And then a follow-up question to that. I know that you serve global defense leaders like Elbit, IAI, Rafael, and then their subcontractors in the US, India, and then Europe. How does that network actually work as a launch pad for this global expansion?
Okay, so let's take India as an example. India became a very big hub for contract manufacturers, and it's a huge country which is growing very fast, top worldwide. And Israel has a very deep connection to India. So we have been, in the last 15 years, took the manufacturing sites to India in some areas. The customers in India came to us because we supply to the Israeli-oriented projects, and they come and buy from us. We also, by the way, build up offices in India today. So we have office in India under a company that we serve the Indian market. So the companies in India and also in the US, in Europe, Greece, Italy, and even in the US, are contract manufacturers of Israeli projects. Iron Dome is being manufactured in the US, for example. So they buy the components from us because we design. Some of them are customized with our IP, with the manufacturer. So we have an extra value that they don't supply the catalog item, they supply customized. So we have an advantage there. So in that field, we have penetrated the global market, aiding by the Israeli project. But not only Israeli projects they buy, they also buy some of their other projects locally or outside of the local market. So they started to buy more and more components from us due to our service. We also agreed with some of our partnership worldwide to sell overseas, not only in Israel, because of our capabilities. You see the result in the last 6 months. We have been selling worldwide over $7 million, in which the parallel we've done 1.6 million. So that is an effect of this global marketization. We have a good future ahead of us to penetrate more into the Indian market and other markets.
Very helpful. Thank you for that information there. Eyal, I think I'll actually kick it to you here for some questions about the robotics sector. So I know that defense automation is a key focus for robotics. Back to this line of questioning here, why defense specifically, a sector that traditionally has been very conservative about adopting new technology?
Yes, so the defense segment is defined by us as a heavy consumer of automation. And so we can expect we can increase the visibility of revenues from this segment because it's a heavy consumer of automation. The defense segment, the defense manufacturers have no choice. They are facing resilient demand, pressure for short lead times, a shortage of employees in the production line. So this segment is where we are focusing our resources.
Okay. And then Elbit Systems is your flagship robotics client. How dependent is the entire division on Elbit, and what is your strategy for broadening that customer base?
Yeah, that's right. Elbit is the major client of our robotic division. But recently, we received an initial order from Rafael, another leading defense manufacturer in Israel, and we are in initial sales processes with the Israeli aircraft industry, another leading defense manufacturer. So I think by the end of this year, we will have a footprint with the key players in Israeli defense segment in addition to Elbit.
Great, thank you. Now let's pivot to everyone's favorite. Let's talk about revenue. So revenue grew from 33.6 million in 2021 to 51 million in 2025. Can you walk us through a few things that drove that growth?
I think in one word, the defense segment. But let's go into detail. There have been three main pillars behind our growth. First, we have increased the number of manufacturers we represent. Second, we have tripled the number of sales engineers, And third, we have benefited from the strong demand in the defense segment.
Great. And then do you think that these demands are sustainable?
Well, as I've said previously, we are working with the defense sector quite a bit as we worked in the Corona medical system. So we see now on the aerospace defense a very strong, sustainable for the coming 2-3 years at least. And why is that? If you look at the global tension, as I said before, now if you look at what's going on, there's wars coming in Russia, Ukraine, and the Middle East. So they use all the warehouse ammunition and air defense. Just to give you a brief recall on this, if you look now at what happens even now today, you see a lot of launched missiles from Iran, but in the end, there's some interception issues in some areas in the Middle East, including the Gulf countries, because they don't have enough interceptors already, which means the US keep their interceptors, what they left, Israel has, but there's a big need, and there's also in Ukraine, not enough interceptors. So in order for them to have, and money is not an issue for the Gulf countries. So by the way, also in the UAE, there was Israeli air defense systems, the Iron Dome. So what happens now is they will use all their money to buy as much interceptors as they can. But there's a limit of production ability yearly. So they build up more and more facilities to sustain the demand. Therefore, whatever you see now, it's actually should be the beginning of what we call a big record sale of air defense, which Israel is again number one. So that is something we see, of course, sustainable, and also penetrating the Indian market and other areas more and more. We believe in this as well. Don't forget, we are very creative. So when there was Corona, we went into more of the medical. We also sell to large names in the industry of the customers. For example, Biosense, we are selling some components. We sell also to HP Israel. They were buying local companies and became HP and became Biosense, and they buy components, design sets from us. So we have a bit of what I say, segments that we can play if we see a lower demand. In some areas, we will try to see the next future. This is one of our key advantages. So yes, I see sustainable business from the defense, but I also, as company DNA, being 20 years in BOS with Eyal together, we always fight to see where we can make more money and see more opportunities. So yeah, we have the sustainability for the coming 2-3 years.
Got it. Great. Thank you. And then Eyal, I'll kick it back over to you. I know that in the past you've mentioned that you believe that you'll exceed last year's 51 million. Let's talk a little bit about that and really what gives you that confidence.
Yeah, very simple. Because during the first quarter, we sold $11 million, and our backlog at the end of the quarter amounted to $31 million. So by the end of the first quarter, we had secured approximately $42 million in revenue. So it makes sense that we will exceed the $51 million in revenue in year 26.
Got it. Thank you. And then Moshe, to bring you back into the conversation here, let's talk a little bit about the dollar depreciation against the shekel and pressures against profitability. How are you managing that, and what's your hedging strategy there?
Most of the sales are quoted in US dollar, and we buy most of the products in US dollar. But most of our operational expenses are in Israeli shekel. The devaluation of the US dollar against the Israeli shekel increase our operational expenses and press our profit margin. Since we believe that the US dollar will stay weak over the long term, we are working through two channels to offset it. First, increasing revenue on the existing operational platform, and second, increasing our sales margin. In the first quarter, our gross profit margin increased by 1 point to 24.9% from 23.9% in the comparable quarter last year.
Great. Thank you for that clarity. Avidan, again, back to you here. So I know that you cited global defense budgets rising as a structural tailwind here. And I think we talked a little bit about this, but just to clarify, which geographies or programs would you say that you're most focused on?
Well, as I've said previously, India is a very key market. I just have to maybe expand the information about India. India is becoming a worldwide global hub for defense and aerospace for few factors. The China market, which was a big CM contract manufacturer sites, has from various reasons decreased their position, especially on high-level industrial tech and military aerospace. So the Indian market became a safe haven for global companies to come and manufacture high-level technology and the aerospace defense. We have built up in the last 20 years the Indian relationship between us. So it's very, very difficult to enter India from various reasons. But if you do that, if you know how to, what we call play the game in India, then there's a world of opportunities. So we have succeeded doing that, and we see that as a firm future. And also we have opened these offices under a company which we started just this year. Also, the US is a prime market. We sell to the US, also part of the Israeli relationship and partnership between Israel and the US in aerospace defense. And we sell also a bit to Europe. We are going to work also on increasing that opportunities, as we've done $7 million, as I said, in 6 months versus 1.6 million. So we see that as a growing market. And as Eyal mentioned, you see in our backlog the work all of us do to ensure future. Backlog is future. If you look at investors, they look at every quarter, but if you look at most, I would say one of the most key point is the backlog, and we have a very strong backlog, and we see still that it should be a strong backlog. So this should, and many of it also include US based, Indian based business and US based business. So this is our prime market, India and the US.
Great, thank you. I want to also make sure that I'm pulling in some questions here that are coming in through the chat. So Eyal, this one I'm going to read. It seems like it might be a question for you to answer here, but it says, you're targeting acquisitions of up to 20 million with no shareholder dilution. Can you say more about what kind of companies you're looking at and how advanced your pipeline is?
Yes, so the first and most important condition is profitable companies with a solid history of profits and a positive outlook. The second condition is synergy with our core business. So we currently have several opportunities on the table, and absolutely we will share with you once we sign one.
All right, let's go ahead and jump here to another question that I see coming into the chat, a few more. So it says here, why use only half bank financing for acquisitions? Is that a policy or is it driven by current market conditions?
Okay, I take that. Our financing model is based on 3 principles. 1, no dilution for the shareholders. Second, leveraging the $10 million in cash we have on hand into $20 million in investment through bank loans. And the third, we can use bank loans because the target company should be profitable. And it will allow us to finance 50% from the acquisition by bank loans.
Got it. And then another one here in the chat. It says you trade at book value while the Russell 2000 trades at 2.6 times. What do you think is the single biggest reason for that discount, and what is going to close it?
So I think the major point here is the major word is exposure. Because there are thousands of companies listed on the NASDAQ, and we need to grab investors' attention for both stories, for our stories. So for that, we hired the IR firm for the first time in year 25. And recently, we changed our IR strategy toward digital marketing as opposed to the legacy method. And for that purpose, we hired Delay Communication, which specializes in digital marketing for investors. And hopefully, it will yield a higher exposure.
Yep. So looking forward to a lot more events like this. Okay, so I want to get a few more questions here before we wrap it up today. Moshe, let's go to you here on the first one. It says, what is the floated number of shares?
We have about 7 million outstanding shares, all of which are floating.
Great. And then do you have derivatives?
Yes, we have 430,000 option and warrants with an average exercise price of $3 and an average remain life of 2 years.
Great. And then Eyal, what is research coverage looking like? Do you have research coverage?
Yes. Recently, we have been covered by AGP. I think the first report initiated 3 months ago.
Great. And then the target price for BOS, what is that today?
Yeah, so the target price, according to AGP, is $8, which is approximately double what we are trading at today.
Great. And then again, as we wrap up, just a few more questions here. Eyal, maybe you can give us a few of the key priorities for BOS in 2026.
Yes, so with the 2026 approaching, I'm pleased to know that we have already secured 80% of our annual target revenues out of the end of the first quarter. That said, we continue to closely monitor the impact of currency fluctuations on operational expenses, as Moshe outlined earlier. And looking ahead, our primary focus is driving BOS growth through M&A, and I'm hopeful we will close at least one transaction before the year end.
Great. And then one question I'd like to...
Can I pop in a second?
Yeah.
I want to also to add on this. Me and Eyal worked together for the last 20 years to make BOS great again, as Trump said. Anyway, it's so we work very hard. We see ourselves as blue collars because we work specifically every day, and we like it. We love the job, and we are passionate for the company, as if even if it was ours. We work as if it was ours. This is something unique. We come every day to make this happen. And we truly believe in the future because we have the experience, the managemental experience. We took, at the past it was a losing company, we took it to make it profitable for sustainable period. And we look for the future with all our knowledge and expertise. And we are sure that we will futurely make it again better and better. This is what we aim. And this is something that we feel together.
That is a great answer to that one. And then the last question, I was going to say, all of you can comment on this if you'd like, but what would your message to investors be who are hearing BOS's story for the first time today? And that's how I'll end it.
Yeah, especially in the current environment in the market. So the investment risk in BOS is relatively low and the upside is relatively high. The risk is relatively low because we have been profitable for 21 quarters in a row. We have strong balance sheet, as I mentioned before, with $10 million in cash, less than $1 million in long-term loans, $30 million in equity, and most of our business tied to the growing defense segment. The upside is valuation. We trade at the book value, and if we take off the cash on hand, our enterprise value is less than $20 million. This is for a company with net income of $3.6 million, EBITDA of $4.6 million. So this is the exact definition of upside.
Great. Thank you. Always very important. So with that, I think that we can end it here today. Thank you all for sharing your time and your perspectives with us. And then thank you to everyone who joined today's virtual investor event. If you have any additional questions or you'd like to learn more, visit the investor section of the BOSCom website. Any other questions, feel free to email the email that will pop up in a second on the screen. So thank you again, and we really appreciate your time today.
Thank you very much.
Thank you.